Good morning, everybody. Happy Tuesday. What's good? This is the Macro Ghost, and I'm going to be diving into one of the most overused and also misunderstood indicators out there, the RSI, or the Relative Strength Index. Everyone slaps it on their chart. Maybe you've seen it, maybe you haven't. Maybe you're a total noob. If you are a noob to technical analysis or trading or investing, this is going to hopefully help you a lot. If you are not a noob, stick around because you might get some opinions of mine that might help you later on. In this breakdown, there's going to be no fluff, no shills. We're covering the basics of the RSI, and we're doing it on our favorite stock, ImmunityBio IBRX. So stay tuned, like, comment, and subscribe. Tell your friends, because I'm here to lead the herd to prosperity in the biotech, choppy, volatile biotech land. Stick around and we will get right into it. So as you can see from this chart, this is a daily, and I'm going to use the 4-hour, the daily, and the weekly. I'm going to use these because the 4-hour is a very short-term time frame. Let's just go to that. The first thing I want to mention, if you've watched me, you've known that I call out the 50 level on the RSI as being critical. The 50 level is kind of a level that either uses support or resistance really well. It doesn't have to. It can break down to 30 and be oversold here at 25 if it wants to. A stock can do anything it wants to do. It depends on supply and demand, buyers and sellers, profit takers and short sellers. So the 4-hour is kind of like a short-term trading chart. And in this case, I would look for the 4-hour to come down and completely reset at 30 for me to have a short-term trade. I'm not a short-term trader though. Most of the time I'm a swing trader. So I will be looking at the daily, at least the daily, okay? And we see from the daily, if we go back to the past and we go to when IBRX was really hot, the hot days back in 2018, 2019, 2020. And you could see these spikes in the RSI being way oversold. So let me first go back. 70, above 70 would be quote unquote good because the price is going up, but also overbought. So overbought means probably time for a chill out session soon. And how can I say this confidently? Well, let's look at what the RSI does. Overbought, great, price go up, right? Price go up, overbought, and then what happens? Chill out session, all the way down to oversold. And then what happens next? Price go up, great, to overbought. And look at this, the RSI makes a lower high, but a higher high in price. That's actually called bearish divergence. And so what happens next? A chill out session. We go all the way back down. And what happens next? RSI makes steps up, and then blows off its top at about $44 a share, and the RSI at 89. Now, it didn't make bearish diversions this time. It just blew off its top and then came all the way back down and then spent many years kind of chopping around. Now, this chop to me is meaningless. It's meaningless. But as a trader, if there's a big event happening, which there is, cancer is a big event and approval is a big event, I'm looking for this daily to come down to 70 or even 50 to have a cooling event. It can even come to 30, to be honest. But I said in a previous video, oh, the RSI is 95. That's a little hot. I'd be looking for it to come down on a weekly to 70. This is a daily. The higher time frames are stronger reads. They're more powerful. It takes more price action to move them. So if we go to the 4-hour, you'll see that we're already at the 50. It didn't take much to move it to the 50. And what does that signify? It just signifies that there's more sellers than buyers. But as you can see here, let's point out some price levels. This level right here is at $6, but the RSI didn't come down that much. Then this level right here also is at $6, and the RSI came down a lot. What that tells me, this is the takeaway, is that there's concentrated selling. There's concentrating traded selling. Now, let me define that. You have a global market, a world of 8 billion people. If all 8 billion people are selling a little bit at a time, the RSI won't move down that much. It's non-concentrated. It's diverse selling. It won't have a swift move down. You see this from here to here? The RSI moved down a lot because the selling was concentrated. Here again, the selling was concentrated. What I mean is there's only a few accounts dumping a lot. That could be short sellers. That could be profit takers. It could be anything. But this little move in the price, and this is a little move in biotech, that's not much, brought the RSI down to this much. That tells me that the price can come maybe to 5 and the RSI will fully reset at 30. It just tells me. Does it have to be like that? No. But that's what my eyes see. In a hypothetical scenario, if the price moved down to 4, and I'm sorry, if the price moved down to 6 and the RSI only moved down to 70, that means the selling to me was diversified. Lots of banks, lots of retail, lots of global market selling, and diversified selling is healthy. Concentrated selling, there will be more volatility in the RSI. And could be more opportunity for upside. So the first thing you have to be aware of is the selling concentrated? Let's just call it 5 accounts. Or is it diversified? Let's call it 5 billion accounts. Just to make that strict diversification between the two. And this, I would say, is concentrated selling because it moved down so much on the 4-hour. And then if it hits 30, I'm a buyer. I'm a buyer because I look at history. When it hits 22 here, is that a buy? Yeah. Why is it a buy? Because it goes back up to 80. Buy low, sell high. Buy low, sell high. Buy low, sell high. Again, if it comes down to 30, we're not panicking. We're looking for entries. So am I looking for an entry now? Maybe. I'm being patient. I think there's more down. I think it can come down more, but will it? I don't know. It could go back up. But the takeaway is the RSI is down a lot, and the price is matching its level here. You know, it sold off here, and then it sold off here, and it's matching that price level, and the RSI is down a lot. So to me, that just says there's concentrated selling. There's not a bunch of retail selling. Retailers are holding, and maybe the banks are selling. And just like there's concentrated selling here, let's go to the weekly. Look at that concentrated buying. What was that from? You know, I'll take you back to 2020 September, and the price was $6, and it went all the way to 44. The RSI went from 45 to 85. That was global market buying. Why? Why do I say that? Well, the RSI here is 40, and it went to 85. And the price only went from $2 to $8. That means the buying was concentrated. It means a few accounts had to cover their shorts. To me, am I right? I don't know. That's just how I read it. When I see the RSI spike like this on a weekly, it means that people are being forced out, aka a short squeeze. That's why I said, oh, I think there's a short squeeze happening. And I drew this line right here because this is a technical level. This is like resistance, 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 and then what I think or perceive to be resistance. I don't know. I'm just guessing. And a high RSI. So I'm looking for this RSI actually to come down. I'm looking for it to get support because I do think the technical analysis in the biotech industry is so hard because biotechs are driven by fundamentals. What is a fundamental? It is cancer rollouts, distribution, buyers, Merck, buyouts, global buyers driving up the revenue. Revenue is a fundamental factor. It's not a technical analysis factor. So in a biotech, I'm more geared on fundamentals, but I wanted to show the technicals to offer a more clear idea of what's going on here. And not to be scared. Again, this is normal price action. The price can go to 9 and come back to 2.5. Do I think it's going to do that? No. I think there's going to be much more sustained institutional buying. in the buy side funds like Fidelity and Wellington. There are buy side funds out there that are going to want to own this in their biotech ETFs, because if a cancer cure rolls out, that's going to make their holders a lot of money. So what I want everybody to understand is don't be day to day on price, but if you want to study the RSI, go down to a short-term RSI first, because you're going to get more movement there. Say, oh, we're at 50. You see how 50 is kind of a median level here? You know, and if it goes above 50, you're kind of overbought. And if it goes below 50, you want to buy. So 50 is kind of this level where, okay, it could bounce from here, right? In a bull market, like let's go back. Like, look at this, it's bouncing off the 50. But generally, in the past, it's gone up and come all the way back to 30 on the 4 hour. So if this is valuable to you, leave a like, leave a comment. I just wanted to have an introductory, 10 minutes and describe what to look out for on the 4 hour, the daily RSI. I'm looking for the daily. This can come all the way back. Let's draw a fib level. Let's introduce to fibs. So the low, 190, the high, 825. And these are levels that you'll find bots and algos coming in and supporting the price. So it's not financial advice, but it's something that you can look at. If you draw a fib from low to high here, you'll get the 0.382 at 583. So you can look for support here. Also, we're at the moving average line of the daily RSI. So you can look. So this could be a level of support, but generally what I'd look for is the 618 to be like, or the 786 to be the golden pocket of buying opportunity. So I'd be dollar cost averaging from 550 all the way down to 350. That's just me personally. So that's the RSI and the fib. I don't want to go too deep into that because I want this to be for new people, for scared investors, to kind of have draw their own conclusions and look at really low time. We can go to the 1 hour and we're going to see something really bullish, right? We're going to see, oh, look at that, oversold. So the lower the time frame you go, the less macro it is, the less big picture it is. It's micro. But if you go to the 1 hour and you say, I'm a 1 hour trader, I'm a day trader, the day trader is going to be looking at this here and saying, okay, I'm going to buy the 30 level. So now we've gone all the way from overbought 90 to oversold 29. And if you look at the history of the 1 hour, yeah, it could go below there. But again, this is a read between 0 and 100, so it's not going to go below 0. But it could go to 13. And if it goes to 13, yeah, that's probably an area where I would buy. And what's the price of that? I don't know, $5, $4.50. But generally, if you're a day trader, and I'm not really a day trader anymore, I'm looking to buy off this 30 level. And that's the 1 hour. The 4 hour will show you something different because it's a higher time frame, it has more strength. The daily will show you something different because it's a higher time frame, it has more strength, etc. So it takes years to learn, but it's something that is very interesting and can help you digest the technical aspect so that you don't get nervous and jeet out your bag, right? You don't want to do that. You want in my opinion only, I want a dollar cost average. That's it. And then just wait for events. Buy it, set it, forget it. That's going to be it for today. I don't want to go too long. Thank you very much, guys, and I hope you got value from this. And that's going to be all for today. Thanks.